some of the other movers that he's been spotting. Kunal, what's on your list?
So it's a PSU stock, and one of the names which I think over the last few days was in the thick of news flow, but the stock price has been a lot more subdued, and that's IREDA. The chart for the stock on the short to medium term basis is extremely classic, because the stock in the last few months had gone through a massive downtrend. As you can see, that the stock has been going through a pattern of a resistance trend line for itself from 225-30 levels towards the point when the stock was forming a base at the 130 mark. Now, there are multiple things which have happened for the stock. So in the process of this recovery, a major trendline resistance on the downside that's been broken, and we've seen the change of characteristic where after a move up on the higher side, the stock has actually taken a support and then bounced back. So this could be a classic sign of a breakout for IREDA. The second and the more interesting part is this neckline resistance. As you can see, the stock with the short to medium term charts has been taking resistance at this 180 levels. The gap was partially filled, for the stock, and now I believe that the stock should be ready for a breakout about that 180 mark. If that happens, this could almost be like a 40 to 50 point breakout for the stock in the near to medium term.
And Kunal, what about your stock strategies?
So I go with two buy calls. The first one, which I would be suggesting, would be one of the stocks which we've been tracking very closely, and that's ITC Hotels. That's a stock which on the short term basis is making a comeback about 200 levels. So look out for targets in the range of 215 to 220. Stoppers could be kept at 200. And Siemens is the other stock which I believe could be a good contra bet at current levels. It's still below the 50-day moving average, but I think the risk reward is a bit more positively skewed for the stock. So look out for targets in the range of 3,000. Stoppers at 2760.
Okay, let's take a very quick break then.